Hello everyone, this side Rahul here as the Chief Executive Officer of Treasury Consulting LLP, and today we would be covering two dedicated videos about Quanto convertible dividend swaps. Yesterday we had a word about convertible dividend swaps, that how in convertible markets are changing very fast. Now today we would be covering about Quanto convertible dividend swaps, which is QCDS. Most of the people never read about that, and in fact except foreign author books and except traders, people don't know about much about that. But here we are going to discuss about how Quanto convertible swaps are changing the world. And after this video we were coming up with a very fantastic and eye-opener video wherein we are going to covering the masala bonds versus non-deliverable markets. That would all be based upon the data which we have taken from live Bloomberg. So which is as of today, but this video would be covering after that. In this we are taking an example of an American company, a well-known company. Unfortunately this is in the negative news right now, Microsoft, because of declining profits, but that is a different fact. We are assuming that Microsoft is looking for a $10 billion of funding for their software development work. Although Microsoft is a cash-free company, but we know that American companies, majority cash of the American companies are at offshore, and the perfect example is Apple. Whenever we talk about offshore cash, and without quoting an example of Apple, it's make no use. So on paper they have $250 billion of cash, and I think it is more than that. They can buy the New Zealand as a country, but not more than $20 billion is in American books. Rest all is in offshore. And I think, if I'm not wrong, they are raising another $7 to $10 billion for their upcoming few projects. Of course, it is nothing. They still would be cash-free company, but to an extent, the offshore would play an issue in the books of Apple. But here, back to our topic, Microsoft is raising a convertible whereby they need a $10 billion. The tenure is 10 years. Hard call period is 4 years. Hard call period means a period you cannot call the money. You have soft call, which is 6 years. iBanker is JP Morgan Chase. Registrar is Citibank. The rate you agreed is LIBOR plus 125 basis point. Now here we are not discussing that what would be the strike ratio. Most of the people must be thinking that we would be discuss about the strike ratio. Example, one bond is equals to 10 shares. What is the current value of the equity? We are not going to deliberate upon that. We are going to deliberate that how Microsoft can take a benefit of the Quanto convertible dividend swaps. Who are the investors? Since we are talking about the largest software company, they are the investors. Foreign institutional investors, foreign direct investors, qualified institutional investors, PPP desk, private placement programs, managed futures, commodity trading advisors, managed traders, platform traders, iBankings, and US banks. They are the predominant investors in that. Now the issue with that, out of $10 billion which Microsoft has raised, assuming there is some issue in the planning, and because of that issue they won't be able to consume the entire money which they really wish to consume. So they raised $10 billion, they not be in a position to utilize the $10 billion. So what exactly it's happening that they only utilize $3 billion and rest $7 billion is lying idle in the books. This is a big issue, that you raised $7 billion at L plus 125, which is LIBOR plus 125. We are not here discussing that how to hedge the convertibles. That is something we will discuss in some other video, that how to discuss the L part of that. But in that convertible, they are paying L plus 125, which is a floating rate. How they can take the benefit of that? They will go for Quanto convertible dividend swap. All those people, those who watched my video, they could have also argued or put their proposition that they could have, Microsoft could have went for convertible dividend swap also. They could have. There is no double words in that, or there is no other words in that. But here we are making a case little difficult to explain Quanto convertible swap. Now what case which we are making? That we are assuming that they have some GBP liability, existing GBP liability. Now you can assume anything. It could be because of some funding which they have in the books. It could be some capex which is going on. It could be some proposed capex which is on the way. It could be some derivative gain loss, or you can assume anything. But in nutshell, they have some existing GBP liability in the books. but they are paying L plus 125 to their bond traders on $7 billion. Let's have a Quanto swap. I'm paying dollars, but actually I need GBP. Had Quanto swap not been the case, I would have converted the forward contracts. I have sold dollars and bought GBP, which is roughly 1.30 now, right? Now what I do, Microsoft Corporation will sign a deal with one of the best known American banks, which is Goldman Sachs. And this is going to be the Quanto swap. Now how it would happen, Goldman Sachs will say that you will pay me dollars, let me make a sign, you will pay me dollars and I will pay you GBP. Of course there would be an agreed rate. If the deal is happening today, then they are going to agree GBP dollar at 1.30, and that rate would be applicable throughout the life. So if this rate will grow, to 1.5, then it would be a loss for Goldman Sachs, and if it will reduce to 1.2, it would be a gain for Goldman Sachs. But that call you need to take, right? In this, what would happen? The existing GBP liability could be set off from the GBP which you are receiving from Goldman Sachs, and this funding which you are actually paying to the bondholders can be offset via Quanto convertible dividend swap. The only thing which you need to do in that, rather than issuing this money to the existing investors, you should issue in the form of a private placement to a bank, which is Goldman Sachs. So what you would be doing, rather than issuing to the other party, like you announced for $10 billion, and all of a sudden you got to know that not more than $3 billion is required. Now you are in a trouble, because if you take your options back, then you will get a negative feedback from the market. So what you did, you give this chunk to a private player, which is Goldman Sachs, and you ask them, we are giving you only because we want you to do a Quanto convertible swap. He will go for why Quanto? You will say that because I have existing GBP liability, which I would like to offset with a dollar liability. So net what it would happen, you raise the complete money, you utilized only 3 billion out of that, the existing liability in the GBP, which you offset it with the dollar terms, so your liability which you offset it with the GBP, this cost has been offsetted by the GBP which you are receiving. So this is one arrow and multiple sparrow, but that can only be happen till 6 years, because this is 4 years, which is a hard call period. Because after the hard call period, an investor might come, a company might come, and if the trigger would arrive, and company might call their money back. So such kind of arrangements, whether it is a convertible dividend swap or it's a reverse convertible dividend swap, that can only be possible till the hard call period, because after hard call anything can happen. This is about this video. If you have any questions, you can connect with me, which is 9899242978. My email is rahul.magan@treasuryconsulting.in. Before winding up this video, we would like to tell you that we are coming up with our fixed income platform, and that is set in October 2018. And hopefully the Singapore fixed income platform would be ready by January 2018. And in this we would be able to offer you everything, whether it's a convertible swap, non-convertible swap, dividend swaps, LIBOR swaps, amortizing swaps, there are many things. In case you have any consulting and the trainings requirement pertaining to that, you can come to us. Thank you and have a wonderful time ahead.